Hello. So today is Thursday, August 13th, and this is our news brief on tech and business. NVIDIA turns AI chips into a Wall Street asset class with 500 billion financing push. So NVIDIA signed a uh, memor- uh, um, memorandum, memorandum of understanding with six major asset managers: Apollo, Blackstone, BlackRock, Brookfield, Goldman Sachs, and KKR, to mobilize more than 500 billion in third-party capital for data centers and NVIDIA hardware. Jensen Huang, uh, I think it's Jensen Huang, called chips an investable asset class. Oh, really? And compared AI compute to electricity and internet infrastructure, saying the technology has become productive, long-lived, fungible, and flexible. BlackRock CEO Larry Fink likened the finance push to the creation of mortgage-backed securities in the 1970s and said that the firm is raising quite a bit more capital for the strategy. A bit more context: the deal structure lets hyperscalers, AI labs, enterprises finance GPU purchases through institutional credit instead of tapping their own balance sheets, addressing a core bottleneck as AI capex heads towards 581 billion in 2026. Moody's has warned that unprecedented capital expenditures are squeezing free cash flow and forcing tech giants into heavier debt loads, creating a tension between AI demand and credit risk. So here's the implication to that. Small and mid-sized businesses buying AI cloud services will see infrastructure costs embedded in their pricing as providers pass through the cost of finance GPU capacity. Operators evaluating AI vendors should ask whether their provider's compute is owned, leased, or financed, because each model carries different long-term pricing and availability risk. And so here's my personal take. Again, I'm just some guy on the internet, so this is not financial advice, but it sounds like there's this big AI bubble now. Instead of companies, if an individual company makes a bad calls, bad decisions, and they go bankrupt, they lose it all. Okay, well, it's on them, one individual company. But now they're taking assets from the market and they're taking on all of this debt. Um, and that is quite scary. Um, and so, what happens if the whole AI system collapses? What happens if, let's say, okay, well, we need data centers now, but what if better tech comes out, right? There's always better tech, and these LLMs, they don't need this heavy power, these data centers anymore, and that'd be great, right? We actually can get clean water and not, and avoid noise pollution, right? And we can run really, really powerful AIs on, let's say, our laptops now, because the advancement of technology has gotten better. But what happens to all of these investments, right? The whole AI industry may collapse because of that, because there's nothing sustaining it, and it's on the investors. So that's my concern. Next is Meta ships Muse Glimmer open weight model built to run on a laptop. So Meta released Muse Glimmer on August 10th, a 30 billion parameter open weight model designed to run locally on a Mac or PC with a single consumer GPU and 18 gigs of RAM. The model is a distilled version of Muse Spark 1.2, and Mark Zuckerberg announced plans to open the weights for a full Muse Spark 1.2 model, which rivals top foundation models from Anthropic and OpenAI. CNET reported that Meta's model can run AI agents directly on a laptop, letting developers test and deploy agent workflows without paying for cloud inference. A bit more context here: Meta and NVIDIA are part of a consortium of more than 20 US tech companies urging policymakers to avoid premature restrictions on open weight models, framing them as a tool to extend American technological leadership. Meta previously burned bridges with developers when it shifted from open weight Llama models to proprietary releases. And Unifor CEO Umesh Sukdev said that his developers almost felt betrayed by the company's track record. So I'm glad that Meta's bringing back open source again. So here's the implication. Small teams that cannot afford monthly cloud AI bills can download Muse Glimmer, run it locally, and avoid per token pricing entirely for sensitive workflows. Companies weary of Chinese open source models like DeepSeek and Quinn now have a US alternative, but they should verify Meta's commitment to open weight ecosystem before building production systems on it. AI infrastructure spending complicates the Federal Reserve's inflation fight. US AI capital expenditure is on track to reach $581 billion in 2026, equal to 1.8% of GDP, and projected to rise 2.8% by 2028, according to Goldman Sachs research. Household electricity prices rose 10% in 2 years. DRAM prices are up 400% since 2024. Yeah, good luck building a computer. And computer software and accessories costs are up 22.4% since July of 2024. Minneapolis Fed President Neil uh, Kaskari dissented in favor of high rates, citing data center investment as a new demand element to a high inflation Americans are experiencing. Contacts as only 17 to 20% of US businesses reported using AI as May of 2026. So only 70, like 20%. So a one-fifth, according to the Census Bureau, meaning the inflationary cost of building AI infrastructure is arriving before we actually see productivity. Fed Chair Kevin Walsh, who previously called AI a significant disinflationary force, has shifted to more of a cautious tone, saying the precise timing and magnitude of effects on the supply side remain hard to predict. So here's the implication here. Small businesses should expect continued upward pressure on electricity, software, hardware costs through 2026 as data center construction drives demand for power and components. Operators should factor AI driven inflation into their 2026 budget forecast, especially for cloud services, SaaS subscriptions, and hardware purchases led to memory chips. So I'll tell you some of the things that we're doing. We're using AI, more heavily, but also we're looking at all of our SaaS subscriptions, looking at is this necessary? Is this something we can bring in house? Can we host locally? Can we host it in our own VMs rather than paying for another, SaaS? Usually it's per person per month subscription, which can really add up as we buy more and more SaaS subscriptions. So those are some of the things to consider if you're running a business with at least 10 people. CrowdStrike and Palo Alto hit record highs after Black Hat shows AI agent threat. So it's CrowdStrike and Palo Alto networks each jumped more than 5% to new highs after the Black Hat cybersecurity conference in Las Vegas, with BTIG analysts declaring that AI agents have fundamentally changed the threat landscape. Rubrik rose about 9%, and Zscaler, Netscope, and SentinelOne and SailPoint each gained 4 to 5% as businesses seek agentic security tools to counter adversaries in a hyper-accelerated environment. BTIG raised its CrowdStrike price target to 237 per share and its Palo Alto target to 380, citing AI as a driver of a new modernization cycle in endpoint security. So a bit more context. Cantor analysis said AI has moved from being a cybersecurity feature to a key pillar of both the attack surface and the attack defender infrastructure. Jefferies analyst Joseph Gallo expects cybersecurity spending to benefit from AI anxiety over the next several quarters, as the Black Hat conference made the worsening threat environment concrete for buyers. So here's the implication. Small business that have delayed security updates facing a narrow window as AI-powered attacks become more common and more sophisticated. IT buyers should evaluate whether their current security stack includes AI-driven detection and response because legacy tools may not keep pace and with automated attack methods. So definitely, yeah, check, triple check, quadruple check your tech stack, all the software that you're running, what's going in and out of your organization, right? AI is getting smarter. It can find easily the cracks in your defenses, in your shields, so it can basically hijack your whole system. It's quite scary, but it's not the end of the world. You got to fight fire with fire. So utilize AI technology to defend yourself. And if you like this type of content, if you want clear, practical updates on tech and business shifts that actually affect operators, founders, and small teams, subscribe and follow along on the Dave Techley YouTube channel. If you want these updates straight into your email, subscribe to the Dave Techley newsletter. And I'll see you next time. Bye.